My name is Ariona and I will host your webinar for today. Before we start with this webinar, I'd like to read for all of you the risk warning so we all understand how it is to trade with CFDs. Trading with CFDs and other leverage products carries a high level of risk to your equity and capital, as prices may move rapidly against you. Be aware you can lose all but not more than the balance of your trading account. Trading with CFDs may not be suitable for you or for all clients, therefore ensure you understand the risk and seek independent advice. This material does not constitute an offer or a solicitation for a transaction in any financial instrument. ForTrade accepts no responsibility for any use that may be made of this information and for any consequences that result. No representation or warranty is given to accuracy of completeness of this information. Consequently, any person acting on it does so entirely at their own risk. So that was the risk warning, and then let's start with the main topics of this webinar. This webinar is orientated mostly in the fundamental analysis and major geopolitical events of 17. First, we will go back and see what happened before and how all these geopolitical events had impact over the market, and maybe to see what can happen also in the future. So the main topics will be globalization and its discontents, the relationship between US and China, and then we're going to speak about the EU and Brexit negotiation. Therefore, we will continue with US and Russia relation, what was the changes on the price and how it impacts usually on dollar prices, and in the end, how terrorism lately has reached to be one of the top five risky instruments that is happening for the moment. So let's continue with the first part of the globalization and its discussion between China and US. It is premature to say that globalization is reversing, but the expansion of the global economy to the world's most distant area is, however, in a shudder. The election of Donald Trump as a new U.S. president because of its protectionism policy will keep it in a restless state for some time in the future. This poses a series of important risks in spheres of politics and commerce. The relationship between US and China is showing this clearly. Over the years, economic independence has maintained control over periodic China and US tensions, preventing small incidents from escalating into major conflicts. As Trump presidency places pressure on the economic ties between US and China, political sparks started to fly. It remains to be seen whether those sparks will engage a security incidents. The likelihood of a severe escalation is, however, related. So, what we would like for all the traders to understand: Trump, before he was elected, he had some topics, and main topic of its changes is to make America great again. That was how he started everything. So he wanted to change the relationship between US and China. And to do so, he had to withdraw America from the Trans-Pacific Partnership. It's a partnership between China, Japan, and America as well. So after everything that happened during this decision, we'll see what was the change on the dollar and how then the things moved in the future. It was always mentioned by Trump during his campaign that he was always attacking China as a manipulator of its own currency in order for them to benefit out of it. And now, after some meetings between officials, Chinese officials, and of course Trump, there is a period of peace between these two countries. Now let's go and see this slide. This is what happened with U.S. dollar. This is only U.S. dollar. There is no dollar currency correlated with any other currency. This is just the U.S. dollar index. This line over here shows that what happened after Donald Trump decided to withdraw America from Trans-Pacific Partnership. That happened on 23rd January 2017. It's just here. After the decision, we see a slight drop in dollar index, and it continued to decline furthermore. And all these changes afterwards are different stories, but we see that when there is a geopolitical event in such measures, we see that there is a huge fluctuation on the market. Now there are other to come. We have other topics to discuss only about Trump. We'll speak in the other part of this webinar. But we want you to understand that this kind of events, how they impacted in the market, and if they are to come again in the future, how they will impact in the future, what can be the total outcome. The next part, what I would like the next part, we were going to speak about EU and UK local election and Brexit talk, the main points on which negotiation will center. We made a special webinar about UK election and what can be the feedback and how can they impact the British pound. We also went back in Brexit, how much pound changed after the Brexit, and how can everything how everything can change in the future. Now, I'd like for everybody to know that already Brexit talk started this Monday. Not so good for UK, but a good start for you. We all know that in this Brexit talk, all the time UK wants to benefit the most out of it, and in the same time Eurozone wants to benefit the most of it. The main topics on this talk, of course, will be EU citizen movement between UK and Eurozone, Northern Ireland, the borders, how they will administrate everything, and the exit bill. After the laws, actually you can call it like that, of the election by Theresa May, because she was aiming for a bigger majority, but actually she got less what she already had. So there is a fragile moment for UK, and that has to be seen in the future. Meanwhile, this is a good sign for Eurozone to proclaim more from UK. So they want to have a Brexit bill. So UK has to pay Eurozone a huge amount of money to conclude with this deal, and they have to see then how they will decide about this movement of the citizenship. This is the first phase, actually, for Brexit talks, and it is supposed to be resolved till the end of 2017. So the first phase includes EU citizen movement, Northern Ireland, and the exit bill. And the second phase that will be it will be a huge speak about this in next year. We'll have in the main focus markets access, financial services, and free movement and the money. In the market access, maybe Eurozone will lead a bit more because they have most of the goods imported in UK, but in financial services is expected as it is actually one of the biggest industries for UK to have the final say, and we will see how this negotiation will continue. We're just speaking now how it's contemplated by the markets with what we have for the moment. So every time to remember that when UK is leading these negotiations, that this can be positive for British pound. But if there is not such a strong impact from UK, then that can be negative for British pound. Or if EU is leading in this negotiation, that can be negative for British pound. I would like you once to remind you once again Brexit. What happened? This is okay. This is British pound to dollar after Brexit referendum. And while we were speaking about the UK election, last webinar was the price was somewhere between. I'm sorry, there is no view of that. It's still 2016, but there was in the somewhere between here. We cannot see it. I can show you that in the chart later on. And now, after all this negotiation, British pound is changing at least almost with 1% a day with all this negotiation of Brexit talk. We'll see what will be the outcome in the future. Well, Brexit was not actually the only threatening of for Eurozone. After Brexit talk, there were a series of election and referendums across Europe this year, threatening Eurozone to plunge down and to maybe to have other problems with other countries. There were some speeches that France actually will hold Frexit. Marine Le Pen was promising during her campaign that if she wins the election, she will take France to a referendum of Brexit to leave Eurozone. But she didn't win the election, and Macron was as a pro-Eurozone candidate, so nothing happened. But meanwhile, also in Italy, there were elections that the fear for Italy to create some Italy exit was increasing, and meanwhile in Germany. But all of these fears actually now are stabilized, and we will see what will be in the future the other election. But for the moment, Eurozone looks like it is in a piece of state. So I would like you to see now what all these speeches about the French election, Brexit in the future, which were kind of threatening for Eurozone because we didn't know what is going to happen. All investors were believing that if France will hold a referendum for Brexit, this could be the beginning of the end of Eurozone. But after Marine Le Pen lost the election, that was very, very positive for Euro. We can see it here. This is the post-election day. There is a huge gap in uptrend for Eurozone. So that was good for Euro. And then it continued. These are other news that impacted in Euro dollar, not necessarily only for Euro, but here we see the huge difference. And it didn't go again in those levels after the French election. This is why Euro was staying down, because there was a fear in rise after everything. So to know this is for future reference. Whenever there is some kind of talk like from any country, big country that is contributing in Eurozone, such as France, Germany, Italy, Spain, if there are some elections and they are speaking about another referendum to leave Eurozone, we will see that the fear will increase. But this usually depends from the country that will hold this kind of referendum. If we have Greece, then it seems that it is a weak country. We cannot expect something big. But nevertheless, any country that may decide again to leave Eurozone, it is a fear, a panic that is increasing, because most of the traders or of investors and economists were believing that if they will leave one by one, then maybe that can be the beginning of the end. But still, this is just in speculation way to look at it, because we cannot know 100% what can happen in the future. Just this idea to explain to the traders that if we have this kind of talks, what should we see and what can we expect on the market. And I'd like to talk actually for one of the most contemporary parts. We have Donald Trump as a new president, and who all his promises, what he is planning to change in the U.S. economy. As I mentioned before, Donald Trump promised to make America great again during his presidential campaign, and equally, markets have taken his word. After his election as a president, there was a huge increase on dollar index, and all the other shares, which actually are considered to be instruments. All the shares in United States started to have a huge uptrend. Nevertheless, since he was elected the 45th president of U.S., his decisions, even his statements and political uncertainty around his administration continue to send shock waves through global markets. His long signal initiatives of repealing the Affordable Care Act, reforming the tax code, calling back regulation, and also making changes in infrastructure spendings have been cheered by markets, and actually the markets that needed a story. But what will be the real outcome? Let's start first with NAFTA, North American Free Trade Agreement. He wants to renegotiate this. Actually, when he was holding his campaign, he said that he will decide to leave as soon as he becomes president. He wanted to leave immediately this agreement, but now he decided not to terminate it, but to renegotiate it. So we spoke about Trans-Pacific Partnership that was he already decided to leave. He withdrew from that partnership, and we saw the impact on the dollar. It was negative because there is a huge economy relationship between U.S., China, and we spoke about the export imports, how much they impacted. So it was negative for dollar. And NAFTA also may bring some huge fear on the future. We'll see. We'll see how he will present it and what will be his plan for the future. One other topic mentioned while he was campaigning was tax reduction. He was making it he made a huge deal out of it, that he's going to bring excellent tax plans for all citizens, also corporates, and he unveiled a one-page plan proposing deep U.S. cuts for many businesses. The tax plan, though meager in detail, matched up closely with the promise that he made during his victorious 2016 election campaign. Just for the record, one of these promises, the US dollar index rose by around $5. So just when he promised this tax reduction, the US dollar, just by the promise, rose with 5% to reach the new record high. But in 2017, this was for 2016, but in 2017, it gave up all previous gains due to uncertainties, included by doubts regarding his capacity to fulfill his promises. So now we have the problem. We had now the promises, now we have the problem how he will make sure to bring these promises, to make them come true. U.S. benchmark stock index SP 500 has been enjoying a strong uptrend even since his election, returning 13.89% to date from that day to this day. His plan proposes corporate tax to be slashed from 35% to 15%, among others. So this is an excellent tax plan if it comes across, but if it doesn't, it can be very, very negative. And this tax reduction is promised to come to be prepared till September, and then to pass the Senate. And if it does, it can be positive for dollar, or as it is promised. But if it doesn't, we know what can happen. And in the other hand, we had healthcare bill, actually Obama bill. He failed to change it. 2 months ago, he was promising much better healthcare bill, but it would be very, very expensive for America. So the proposed replacement for the Affordable Care Act, commonly known as Obama Act, that House Republican leadership unveiled on 6 March 2017, it was already, it didn't pass. It didn't pass the Senate. So now they are preparing another one, and this draft is also promised to be revealed in 2 months. So till then, we will see how it will pass and how it will be the reaction. So when the healthcare bill didn't pass the Senate, that was negative for dollar, because it was one other promise that failed to come true from a Trump campaign. So all investors, all those hopes, all those huge expectations are coming now not to realize. And every time that he promises something new, actually doesn't have the same impact like he did before, when he was promising all this great movement of the price. So now we will see how they will continue with tax reduction and healthcare bill. Make sure that you follow this part. If you are a trader with dollar index, if you are a trader with gold, if you are a trader with euro dollar currency pair, make sure you follow all the time tax reduction, healthcare bill, and what will be the outcome of a NAFTA agreement renegotiation. Every time that he decides to withdraw America from all these partnership that they had before, it has a huge impact in dollar. So let's see now in the chart how dollar index has moved within after all these failures. Let's call them like that, because so far none of his promises came true. So after his election, this is his election in December. This is December. After his election, we see a huge uptrend in dollar index, and now it reached the highest level. And here we see downtrends after each promise that failed to come true. We'll see what can be the outcome within the next month. For the moment, dollar index has an uptrend that happened just because of Janet Yellen's speech. But we are speaking now about geopolitical events. And last but not least, we're going to speak about terrorism. We always try to inform our traders when there is some terrorist attack all over the world, that huge changes can happen in the market. Terrorist attack made it up to the top 5 risk of the Global Risk Perception Survey in 2017. Usually when traders want to understand that the risk is increasing, there is this survey that shows that if the risk is increasing all over the world, all the risky assets will have a downtrend, and this considered safe haven instruments, when there is this kind of sentiment, will have an uptrend. What is considered to be a safe haven instrument? All precious metal, dollar, these safe haven instruments such as Japanese yen, Swiss franc, dollar. These are the strongest currency in the world, and they are considered to be safe haven instrument because when there is a huge instability increasing all over the world, all traders tend to drop out these risky instruments and to focus in the safe haven instrument. So maybe whenever you see some terrorist attack all over the world, the new one, not the one that are already happening and they are already pricing the market, but new ones in other countries that we haven't seen before, we see that there is an uptrend in gold. Gold is a safe haven instrument, and all other precious metals, and also in dollar there is an uptrend, and also in safe haven instruments such as Japanese yen and Swiss franc. We're going to see now the reaction of British dollar and British pound and US dollar after Manchester attack. Of course, this was negative for British pound. So we see here the downtrend, and it was positive. It was positive for dollar, because dollar is a safe haven instrument. This is why there is a huge downtrend. So we are selecting these dates. We are selecting these dates to give you a sample what happened before and how you can perceive it in the future. So this is the moment of the terrorist attack. All investors started to drop out British pound as a risky instrument, and we see here there is a downtrend. If I would show you in this moment gold prices, for sure you could see an uptrend. So this was the webinar for today. Now, after this webinar, I would like for each one of you, if they have any question, to write in the part of the question, and I will read the questions and I will answer to each one of those. Okay. If there is any question so far, it would be good to ask, because I would like to explain each difficulties that anybody can come across in detail. Meanwhile, I'm going to show you, as promised in the beginning, the dollar index prices. Dollar index. Okay, if anybody has any question, please let us know so we can help you. We can answer to your question. If it's not even related to this webinar, if there is something that really bothers you, that you want to understand how it goes, just write it down and I will answer to you. Meanwhile, I'm trying to open the chart for dollar index. Obviously it doesn't want to work. So I will try to go back to dollar index prices. So we said that this is the moment when Donald Trump decided to withdraw from Trans-Pacific Partnership. We see a downtrend in dollar. We're going back now again to dollar. We're going now back again to dollar after all this movement. This is the election of Donald Trump as a president. And then we have some small correction, and Donald Trump failing to bring the promises for tax reduction and for health care bill. So we see that till May, the 14th of May, we had a downtrend on US dollar. Afterwards, we had interest rate decision in 14th of June. It was quite positive for dollar because Janet Yellen had a hawkish speech regarding US economy. It was very positive for US. We see now dollar retrieving again in uptrend. Okay, then if nobody has any other question, I'd like to thank you all for following this webinar, and you will receive, after I close this webinar, registered link from YouTube. You can follow once more. If there is something that you didn't understand, you can rewind it and hear it again. Thank you again, and we'll see each other in another webinar. Have a nice day. Bye.